Let's talk about the market turbulence.
Yes.
Are your clients worried?
We're just now starting to get those phone calls where people are a little concerned. I think after quarter end, they'll be, calling a little bit more, but they are concerned about the growth component. They're concerned about the uncertainty that they're hearing about. And so it's leading them to question what they're holding in their portfolios.
We are not trying to be melodramatic. We have seen market moves like this, even since the pandemic lows.
Right.
Markets do gyrate, and they do often correct, like we're seeing. Is there anything about this that seems different than the other ones most recently?
I think it's the fact that when we came into this market, we were priced really to not be able to absorb any bad news, right? High valuations, high earnings expectations, high growth expectations after the election. Those animal spirits were really driving the markets. So it had us at such a high level. Any kind of negative news was really going to bring this market back, and we tended to get quite a bit of negative headlines coming through.
The other thing, too, is the speed at which this has happened. It has not been slow developing.
It is
and I think that's what's got some people worried. So how does that play in your mind?
Well, I mean, we're getting a lot of speediness coming out of Washington as well, and I think that's feeding into why we're seeing such quick corrections. What we're not seeing happen quickly, though, is earnings expectations come down tremendously. We're not seeing investment grade spreads widen out quickly. Those are the final things we want to see to say, okay, maybe we're in a washout now and ready to turn the tide.
So the rates movements aside, I mean, corporate credit is still holding up relatively well.
Exactly. I mean, when you look at the moves we've seen in credit versus what we've seen in the equity markets, you're right within where you should be. It's not disproportionate at all.
All right. Your word of the day, what would it be?
It's perplexed, and I think that's what the market is right now. It's a little perplexed on what it needs to do going forward. What are tariffs going to look like? What is the plan going forward? It's not tariffs itself, I think, that is causing the issue. It's the uncertainty about the plan of where they're going to go. So consumers don't know what jobs are going to look like. Companies don't know what their CapEx should look like. And the market is just a little perplexed on which way it wants to go. We see it daily, right, in the moves in the market.
So given that perplexity, where are you finding opportunity? What's your stock of the day?
Our stock of the day is Gilead. And I know healthcare is kind of that more defensive posture. People have been looking at defensive parts of the market, but healthcare's been doing really well. It's been in an uptrend, and Gilead has had really good news. Last 4 quarters, they've beat expectations. There's positiveness coming out of their pipeline in HIV drugs. They're trading at like 14, 15 times next 12 earnings, which versus the market is pretty good. And you're getting almost a 3% dividend there. So I think you've got some opportunity in a name in a sector that is on the uptrend.